All right, guys, welcome back.
Happy Monday.
Market Monday.
GameStop Mondays.
Yo, put the chains on the door.
Sure.
For real.
Lock us out, man.
For sure. Back at it, ladies and gentlemen. We got a lot to cover. It's been a crazy day on Wall Street, crazy day in America. So we got a lot to cover. We will be talking about this GameStop situation, E-Trade, all that type stuff. But before we start, big week for Earn Your Leisure. Tomorrow, back to regularly scheduled programming, 1 p.m. Eastern Standard Time. We got a legend in the game, one of the greatest to ever do it. Alicia Keys will be on Earn Your Leisure.
Yes, sir.
Shout out to A Keys.
Shout out to A Keys, man.
That's fire.
She just put out the musical on Broadway, Hell's Kitchen.
Yep.
So that's a groundbreaking, monumental feat. Congratulations to her. We actually went to the play before it even opened up, like full time. And it was a great experience for me, my first Broadway play ever. So it was dope. It was a very, very entertaining, well put together production. Yeah. And anybody that knows about Broadway plays, you know, it takes a lot to get to Broadway, like years. She said, like, it took 10 years. This is 10 years in the making. Broadway is a multi-billion-dollar industry. They run 2 plays a day. She said they run the matinee show and then they run a night show. And there's been plays on Broadway like The Lion King, like Hamilton, that have generated hundreds of millions of dollars. So from a business standpoint, it's very dope conversation. But then also from just a creativity standpoint, we spoke about her changing lanes and completely turning 180 from being a musical artist, a producer, a writer, to now actually helping to produce Broadway plays and what's next for her and her journey growing up in New York. And we talked about real estate in New York. We had a good conversation. Yeah. So and we did it at Brooklyn Chop House.
It's a real New York episode.
Okay.
It's a real New York episode.
Sure.
New York episode.
So shout out to A Key, shout out to her whole team.
Shout out to the entire cast. So we want to talk about classics and debuts. They got nominated for 13 Emmys out the gate. First time ever putting a play together. Nominated for 13, including the show of the year. So it is definitely something that you should go see. Hopefully people took, what, it would have been dope if mothers and daughters saw that together yesterday for Mother's Day. That would have been a nice situation. It's one of the dynamics of relationship between a young girl going into adulthood, dealing with your parents. Everybody could take something from it, man. So and importantly, like you said, it was your first Broadway show. Hopefully we encourage more people to get to Broadway. But we talked about Broadway etiquette. There's certain do's and don'ts that we right? Like there's some things we should conduct ourselves in these settings. And so it's a learning process for all. So make sure you
can't scream, you're
I'm just saying it's New York. So you know what I'm saying? Like, I don't know.
Shout out to A Keys, for sure.
That's fire, yo.
So check that out tomorrow. Dope conversation, and shout out to everybody that joined EYL University over last week. This week we got a dope beginning of 2-part. We got Sandra Martin, who's the biggest episode that we did this year so far on credit, and we're gonna do a credit boot camp masterclass. Is going to be broken up into two parts. So the first part is this Thursday. The next part is next Thursday. So everybody that's in EYL University, make sure you take advantage of that, because that's the number one thing people always ask is like, I need to clean up my credit. Mm-hmm. How do I get access to more credit? What is FICO? How do I get rid of something that's already been on my... So instead of trying to dig down the rabbit hole or pay $37,000 to the credit guru to try to get the
shout out to the legit credit
no disrespect. That's your name out there.
No disrespect. But if there's anybody named Credit Guru, shout out to you. But before they start making 10 different
he hated on me.
Reaction.
Nah, no hate, bro. All love.
Y'all want to gatekeep to come up with the credit gurus.
Shout out to all credit now.
Shout out to credit. Shout out to all the credit gurus. But if you're trying to get your credit right, if you're trying to learn about credit, EY University Thursday, and then next Thursday also, and then
That's fine.
DC. I think we're gonna be out in DC this week.
Yes.
Yeah.
Can we say who we meet with?
Let's
No,
save that. Let's save that for later on. Let's say that for later on.
But shout out to everybody that pulled up to the class. It was dope, man. Ian, this is the first time I didn't even tell you this, but I actually showed my portfolio. Like I showed what I was doing. And so not for motivational purposes only. I told everybody inside the team, like, this is a family, so we're gonna show some family things, and then we also show some of our next targets. So shout out to everybody that pulled up, man. If you didn't watch it, go watch the replay. It's one of those ones, man. Shout out to y'all.
And it's a great content lesson to save your best material for a platform that you own. I want to keep telling some of y'all, like, you can't put everything out on YouTube and Instagram. Shout out to Adam and everybody over at Instagram, but you got to keep some stuff in house.
Ding.
That's a fact. So, Ian, any announcements on your behalf?
Yes. See y'all in DC Wednesday. Shout out to y'all. Shout out to AB. Join Stock Club if you want to get rich from the market, know where the market is going to go up or down, what stocks to avoid, which ones to buy into. You can join ianinvest.com, sign up for the newsletter on joinredpanda.com. If I've made you money, please put yes in chat. I'm ready for InvestFest. Ashley, I want my Shawn Michaels zip line in, or elephant. I know I couldn't bring in a military truck last year, but could I do like an elephant or something?
And I'll say this, as far as InvestFest, been brainstorming behind the scenes, and this year, some people's lives will be changed. I'll reveal some more details later on, but this is the year of give back. So this year, there will be some people's lives that will never be the same after InvestFest. I'll explain later. But get your tickets to InvestFest.
Oh, you've been brainstorming, y'all. Okay.
Yeah, for sure. You got to always reinvent. You got to reinvent the wheel. You can't keep it the same thing over and over again. You got to reinvent the situation. So get your ticket to InvestFest, investfest.com. Troy, disclaimer?
You know how this works, man. Continue to do the research, right? This is our Market Mondays disclaimer. Our content is intended to be used and must be used for informational purposes only. It's very important that you do your own analysis before making any investment based on your own personal circumstances. You should take independent financial advice from a professional in connection with, or independently research and verify any information that you find on our show and wish to rely upon, whether for the purpose of making an investment decision or otherwise. This is a message brought to you by the good brothers at Earn Your Leisure and the good brother Ian Dunlap, the master investor himself. Shout out to the Red Panda family. Shout out to all the earners. Love is love. Continue to do the research. Share the research. When it's great research, give it to the community. But make sure you remember where you got it from. Love is love.
Yeah.
Peace.
So let's talk about Apple. I want to show a video that Ty Lopez recently made. So
Ty Lopez.
Cue the video.
I'm pretty sure, I'll make a prediction, your grandchildren will not know what Apple is. Just like nobody thinks about IBM anymore. Like IBM still exists, but it's not in the collective consciousness. Nobody's gonna remember. Apple's a shitty company. Look, I do like an iPhone. They don't innovate anymore. iMessage, which is a huge tool. It's the worst. I built a company called Bulldozer. It's coming out. We have better texting capabilities, efficiency. Just like WhatsApp is way better. 30 people built WhatsApp. Way better tool. You can create groups, rename the groups, put people in and out of the groups. You can do broadcast lists. None of that you can do. Apple, 100 billion. This is an obsolete bureaucratic company that will disappear. It sucks unless they change it.
All right. So that was interesting, I thought, because it kind of speaks about what we've been saying with Apple. And Ty Lopez is somebody who, I'm not the biggest Ty Lopez fan, in full transparency, because I feel like he's one of these people that I don't know what he's done other than like play basketball with girls in bikinis.
Content vibes.
A lot of content. And
buy the Drewski play.
Yeah, we saw him buy old businesses. I'm not sure what the return was on that.
Business did he buy?
He had this campaign of how he was trying to.
Yeah, he bought was it Bed Bath & Beyond? Yeah,
a couple of stores that I don't know. I haven't seen the return on investment. I don't know what the return on investment was, but he was on a campaign doing that.
Allegedly.
But
like I said, shout out to Ty. You can't.
No, alleged. It's all alleged. We don't no disrespect. It's alleged.
No, shout out to Ty. I mean, I got no problem with him.
Yeah.
You can't knock the hustle, but I'm just saying, he strikes me as an internet marketer. But hey, whatever. But that was just an interesting take, because that is kind of in line of what we've been saying. So I don't want to beat the dead horse with this Apple situation, but I just saw that on Instagram. Thought it was something interesting. So yeah, the destruction of Apple in real time. Is this what we're witnessing?
If they don't fix this iPhone issue, Tim Cook. Yes, I've said since 2020 that the peak of Apple will be 2034. If they don't fix some of these issues, we may see 2030. But it's very rare for a company to last 30 or 40 years and have peak or pole position. I do think they can make a comeback. I was telling Stock Club yesterday on the call, if they make a hard transition into being like into healthcare, because they need a space in which they can operate as a startup. They've maximized the global smartphone market. Mm-hmm. They need to go into another market where they can be in like an incumbent player and innovate and disrupt there. If they move into healthcare, they'll be fine. As a result, do I think we're seeing the destruction of Apple? If we don't see an adjustment in the next 2 years, they won't have that leadership position anymore, because Microsoft worth like the number 2 assets in the world right now is gold and then Microsoft. Yeah. I wouldn't have thought that probably 8 years ago. But they have to make a strong pivot in order to keep this number 1 position. But it's a good lesson. You just talked about it in InvestFest. You have to reinvent every year. Like as much we talked about it with Elon and Kanye and Madonna back in the day, and 50 Cent has done it now. You have to reinvent yourself and move into different verticals if you want to still exist. People won't let you have a 40 or 50 year run off the same product.
Yeah, we're starting to see some of those blemishes. I don't know if it's the full-on destruction, because even when we talk about assets, yes, gold is number 1, Microsoft is number 2, but Apple's number 3. It's right there. But I feel like it's the first time that we see blemishes, right? Like we're starting to see some holes in this golden armor, right? When we talk about some of the products that haven't worked, when we talk about some of the rollouts that haven't worked. I know recently maybe we'll get into it, but the iPad ad and them having to pull back on that, we're starting to see stores trying to unionize. I know they fought it off in Jersey, but now there's another one that's popping up in DC. So you're starting to feel like, all right, this golden brand who has so much loyalty.
Same thing Drake went through. The sentiment's changing.
It's starting to feel like there's a change. We don't know what the innovation is. We'll talk about the ChatGPT situation. I think you're spot on with the industry, right? Like, how do they get into the next industry? Because one of the other blemishes we saw was, all right, we can't wait till they get into the automotive industry. They're going to have this car. And then it's like, you know what? That's probably not going to be it. We're not doing cars. Yep. Where are we going to go with AI? Well, are they going to create their own? Yes, they got the M4 chip, which is probably one of the strongest semis. But can they create their own, or do we just say, all right, let's just team up with a team that's already doing it? Is that innovation? What they do have at their leisure is capital.
Yeah.
And so you have to believe that something will come from having that amount of capital, either it's an acquisition or they're going to double down in an industry. Like you said, it could be healthcare, probably will be, just because of the data that they have. I think that has to be the route. We already talked about innovation in the terms of moving from country to country. Yeah, but I think it's going to have to be a new sector for them, or a new industry inside of that one that exists, and they can take market share from. Not dominate right away, but take market share. Because we already know Amazon, when we talk about healthcare, they're there, right? So can you come in and be disruptive? Can you have some market share? I'll be interested to see over the next couple of years, because it won't. The iOS system is the iOS system. The iPhone is the iPhone. We already know what the services industry does. It has to be something else. There needs to be a shakeup.
Yeah, and then the Vision Pro works as well because of price point, sensitivities. Okay. Also, they need some new board members. I was telling Stock Club call this yesterday, like with the exception of Angela from Burberry, they lost Johnny Ive, huge loss. They haven't added anybody new. That board is still comprised of people that Steve put in that position. I would go after somebody from Lilly and put them on the board, because you need some guidance in that healthcare space. It's not a sexy industry, but I think they can innovate incredibly fast there. They got to make some changes. And I think it's a good rule of thumb every 2 years to like reinvent yourself or your business in some way. And even like with the AirPods, it's more conjecture around if they're healthy or not. The iPad ad you already brought up, people were not feeling that. The iPad in itself, I don't think many people are using it. So they just have to find a way to come up with a better product.
Yeah.
The trading app that they had, they shut down. The car thing, they shut down. It's like, it's tough.
This is like I don't want to call it a casualty, but sometimes when your product is that good, do we need a new one? Right. So like I have the iPad. It still works perfectly.
You don't need a new one every year.
Right. What's the incentive for me to buy a new one? Because now I have a pen that has an extra few features. I don't know if that's the reason.
Which Steve Jobs hated it. Like that's the part, like they almost try and wipe the memory of him building that company away. Like they've gone away too far from what their original vision was. Shout out to everybody who works at Apple. If you want to talk innovation, the iOS has gotten better, but it's not a transformational improvement where you're like, I have to have it. Like even iPhone fans and Apple fans are like, I don't need another iPhone.
Right.
It's bad when your core fan base is like, I don't need another one.
Yeah, and same thing with the Mac sales, right? Do I need a new Mac? My Mac from 2022 is perfect. Do I need a new one? But I think what they've done to kind of offset that is they decided, all right, if we're going to have a slowdown in some of these sales for the iPhone, for the MacBook, for the iPad, is they're putting their own chips inside. And so now you don't spend as much, right? There's not as much outside expenditures, right? Well, there still will be, but until you get to the point where you're just manufacturing your own and you're putting your own chips inside of your devices, that cuts costs long term. But I don't know if there's a product, unless they decide that the M4 chip is so good that they'll start licensing it out to other companies.
That would be crazy. That would be an Intel-like move. No need to build proprietary data and sell it to somebody else. But go ahead, Rashad.
Yeah, well, we'll see. We'll monitor the situation for sure.
Apple's still my baby. For everyone who's going to ask, I'm not turning my back.
I mean, they asked me the other day, like, is it time? I said the time is soon. The time is soon. Just because if you from a technical standpoint, when you're looking at the consolidation, anytime we see any of these Mac 7s, I remember a few years ago was Amazon. It was like, you still believe in Amazon? Of course I believe in Amazon. You still believe in? Of course you believe in Apple. This is that time. It might fall back down. Maybe it gets down to 167, 165. This consolidation is time where it's like, there's going to be a point where you can now, if you're looking to be in it long term, this is the time.
Yeah.
They just announced ChatGPT too.
Yeah.
For iPhones.
Yeah.
So that's
they're nearing a deal. You want to go into that?
I mean, yeah, and I think that's something that we spoke about this before, but they're nearing a deal to have ChatGPT integrated with iPhones, right?
Yeah. So the initial thought was there was talks with Google, and this is interesting, right? Because Google's already a partner with Apple, and so they figured that they would have Gemini as the chat. Yeah, I mean, 18 billion they're already getting from the search engine, from the Google search engine. Here comes ChatGPT, which is, I mean, just taking over the world in terms of AI, and now allegedly very close to nearing a deal with them. They didn't put a price point on it, but in my mind, I was like, remember when we were talking about that gap between Microsoft and Apple?
Yeah.
Right. This deal now, this is like one of these things where, well, now you need me.
Yep.
But it also it highlights mega companies working together, right? Because that's a partner. Google's already a partner. These are part of our Mac 7s. And we talked about this from a micro level. Like, if large corporations at that size can work together, we got to figure out at this level, what's our reason why we can't?
Ego.
I mean, trillion. Yep.
I think it was very smart. Well, I mean, of course, Google is the best at search. They're not the best at AI yet. Brilliant partnership idea for Microsoft and Apple to work together again, probably the first time in 25 or 30 years. It's needed. And if they integrate it into Siri, I think that could start to spark some innovation. But I would love to see this deal be closed fast, move in the right direction. And then, of course, with some sort of economic pullback happening, you're going to see a lot more partnerships like this come as a result. But great move. I think OpenAI, of course, is the big winner because it gives them more market share for the future. But Apple definitely needed them at this time because they can't build an LLM fast enough.
So is this the death of Siri? Right? Because if you have ChatGPT, do you even need Siri anymore?
I think it would be like a booster to Siri. I think so. I think they'll find a way to integrate it because you can't. Well, they acquired it 10 years ago. I think it will make Siri better because if we're going to be honest, Siri has not been It's been gradual improvements, but it hasn't been like an exponential improvement in Siri in probably 7 years. I think this would definitely help.
All right. Well, let's talk about hit the like button and share, ladies and gentlemen. Hit the like button and share. So let's talk about GameStop. This situation that went crazy a few years ago. And we actually were part of a documentary on GameStop where we spoke about how it forever revolutionized stock trading, option trading in America. And for those of you that don't remember, during the pandemic, it was a few stocks, but GameStop is the one that like really caught the public's attention where, you know, you have people on Reddit that went on and they pretty much started a campaign that actually raised the price of GameStop out of nowhere. And they short squeezed some big hedge fund and actually bankrupt a few, I believe, at least one, and billions of dollars were made, billions of dollars were lost. It was a crazy time. I mean, I think the stock like has skyrocketed like 300% or something like that, just because, you know, people banded together and they wanted to raise the stock of the price of the stock, and kind of David versus Goliath situation when it comes to Wall Street. And then, of course, you know, a lot of people ended up losing money. And then, you know, a couple of we actually interviewed Vlad Tenev, CEO of Robinhood. They had a situation where they stopped trading. I think E-Trade has stopped trading. It was a multi-layered situation.
Well, the market suspended all trading on it.
So we are back today out the blue. You know, if you looked at your app during lunchtime, it was up like 75%, I believe, around like, you know, midday. And so game shares soared again today, right? Out of nowhere, reaching an 18-month high. And it's after Keith Gill, also known as Roaring Kitty, returned to social media platform X after a 3-year break. This spike, influenced by Gill's cryptic post, also boosting other meme stocks like AMC. AMC was another stock that went crazy during the pandemic, and that jumped over like 30%, I believe, today. And Cross Corp, I think that went up like 25%. So it had multiple trading halts, right? Volatility. We'll talk about E-Trade. A few sites went down. But it emerged as a winner today out the blue. And, you know, it's one of these things that, you know, people, it brings back memories of those crazy days during the pandemic. And even, you know, we got caught in that situation where I think we had a short and then we wasn't able to fill the short. It was a very volatile time. So this GameStop situation is back 75% in one day. That's crazy, just based off of a tweet.
That's on the shares of the equity. So imagine if somebody had an option on it.
Yeah. So so what's the deal with this situation?
We want brutal honesty, or you want me to proceed with caution?
Brutal, because they probably need it.
Yeah, because even the David and Goliath narrative was bullshit last time around. It was a bunch of people in hedge funds seeding information in Reddit that didn't get caught to push Gabe out of the hedge fund business. And then Gabe bought Michael Jordan shares of the Hornets. So even though he lost there, he got the capital to buy an NBA team. And I was saying it before we started the show, but if CZ got 4 months for $23 billion, Roaring Kitty probably was like, listen, bro, I'm gonna get my little Reddit army back and we're gonna push the stock up. Long term, I would not invest in it. If you guys are trading in it, cool, no issue, get your coins. I would definitely probably take profit at $34. The highest I have it probably going to, if you're looking to hold it longer, would be like 45, 68. And then it will fall from there. But I want to go to the fundamentals of the business, as I tend to do. Profit margin, 0.13%. Operating margin 0.65% and gross margin is 24. The market cap is $6 billion. AirPods make more money than that in a quarter, and revenue is down 19% year over year. So, of course, him tweeting after 3 or 4 years, of course, got it active. And like you said, Rashad, people are looking for some gains to be able to get, and it reminds you of like that 2020, 2021 run. But I don't think this is a great trade. I think all my traders know, like, once it's got pumped, if you can get in, ride it to the upside, but it's going to come back down pretty soon. So I don't want you to get caught up. I'm not a hater of the meme stocks. Shout out to Jorge, who a couple years ago made like 300 grand off of it in Red Panda. But this is going to, when it went up from what, $11 to 37, that's a 3 standard deviation. Like, it's going to come back down to 1725 probably when future contracts expire. So like around the 18th or 19th of this month, it should pull back. So if you're getting in, please be very careful.
Yeah, I would advise to proceed with caution. This is the term meme stock comes from this 2021 area. If you haven't seen the movie Dumb Money, go watch it. This is literally proceed with caution. When you're talking about what is the catalyst for a company to rise 80%, if somebody could please provide us with a valid reason, that would be great.
The boy sat forward in the meme.
He sat forward in the meme. Within 12 hours, that meme had 65,000 likes.
Yeah.
If you get 50,000 people to agree with a sentiment, oh, wait, something's coming, this is what can happen. This is when it's like the retail investors versus the institutional investors. Newsflash, the institutional investors will win.
Absolutely.
This is breaking news. That will happen, whether it's in the next week, next 2 weeks, next month. They eventually will win. And people will feel pain if they don't proceed with caution. So I always advise that. Please be careful. It's so interesting that when in 2021, when this meme stock craze was happening, they were doing it on Reddit. At the time, Reddit wasn't even publicly traded. Fast forward to this year, and just 3 weeks ago,
I was got to see the angles.
Reddit now becomes a publicly traded company. And out of those stocks that you named that also saw appreciation today, Reddit was up 15% at its high. Coincidental? Perhaps, but something to make sure that you pay attention of. So there's always an angle. Somebody's always making a profit.
Absolutely.
And somebody will not make a profit.
Well,
absolutely.
See with caution.
So, okay. GameStop went up $4 billion in valuation today alone. And then you got AMC, you got Reddit, you got all these other companies. So he tweets a picture. Can we put this picture up?
Yeah. Let's put the picture up.
Mike, put the picture up, Mike, please. He posted a picture, which you can see right there, which that's his first post since 2021. And it shows somebody that was sitting back in a chair, now sitting up in a chair, playing a video game, right? Which I would take that as is go time, right? Video game, obviously that plays into the GameStop situation.
I think it's depicted from the scene in the movie too, as well, where he looks at it like, what just happened? And again, go time.
Yeah. And as a result, $4 billion was made.
And that shit gonna evaporate faster than Sam Bankman-Fried's career.
But
last time it went to 120.75, and then in 4 quarters it was down to $34.
But it speaks to a larger conversation, right? The power of influence.
Community.
When we even see Elon Musk when he did this with Dogecoin, it's pretty alarming. That one person can have all, like Kanye West said, right? No one man should have all that power. And I'm pretty sure it wasn't just one tweet. It's probably a concerted effort amongst, underground boards that kind of got the word out. And it was just that this was just the most public forward facing, but still, it's not going anywhere. The power, these type of influence and power is not going anywhere. It's only going to get bigger as social media gets bigger. More people become, online. Social media influencers have more and more influence. it's definitely a interesting conversation about, you know, how one tweet can literally make billions of dollars.
How many people you think will now subscribe to being on Reddit if this continues for like 2 or 3 weeks?
A lot.
Oh,
right.
But
right.
when does the SEC come into play?
This is so that's a part of the game that nobody talks about, is that when brokerages see that type of volume increase, they halt trading.
Yeah, you have to. Yeah.
Right.
When you get a limit up like that, I was like, what the hell is going on?
They're going to halt trade and they're going to freeze it, right? And that might happen 2 or 3 times in a day. And you're going to look like, what happened? And especially if you're in futures and your options, in order to make profit, somebody has to buy, somebody has to sell. Well, if you see profits going out, well, you got to sell it to make the money. What they'll do is make sure that contracts don't get sold. Then what? Then you have the imaginary money or that unrealized gain.
Yep.
The only way you make money is when the unrealized gain becomes realized.
Well, that brings to the next topic. So what happened with E-Trade today?
So I don't know.
So they were smart. That red button Drake was supposed to hit, they hit it. Stop everything. Okay, great. Y'all want to run us up? And we just bought TD. We're not going to have billions of dollars of losses on our books. Freeze everything.
Freeze everything.
It's a game inside of a game. It's your money. Kinda. It's like going to the bank. You can't withdraw $2 million out of the bank.
Yeah, but imagine going to the bank and not only like it's Monday morning, but the bank's closed and we don't know when it's going to open.
Yep.
Yeah, but you can go online. Well, online's not working either. So if you open and if you had an E-Trade account this morning at probably 9:25, you couldn't log in. 9:30, you couldn't log in. 10 o'clock, you couldn't log in. 10:30, I finally got back into the site around 11 o'clock. Now I thought it was like, okay, the site's back open, but I started calling around. People still couldn't get back in like 12, 1 o'clock, 2 o'clock. So thousands of people, thousands of accounts. You not only was
allegedly.
No, that's a fact.
Well, we don't know if this is directly.
I didn't say that. I'm just saying that the brokerage itself, the site was down.
Is it a coincidence or not?
Allegedly.
No. But also, if you reach your risk disclosures for incidents like this, they have full right to do what happened by accident or on purpose.
But they can suspend trading. They can't close the brokerage.
Read your disclosures.
I shall. Maybe
yes,
I shall. Shut it all down.
Because if they are the custodian of your capital, they have a right to do what is best as a fiduciary for the clients and for the user base.
So this goes to another question.
I'm be honest. For the first 15 minutes, I thought I was being hacked. First 15 minutes, I was being hacked because I was going on all these threads. I went to Reddit. I went to Twitter. I didn't see anything. And then finally I saw, oh, the site is down. Isn't this great? Perfect timing. Yeah.
So the next question is that, okay, all right. So this guy comes back out after 3 years and tweets one tweet and GameStop goes up 75%.
Yep.
And as a coincidence, E-Trade site shuts down.
They went through maintenance.
Scheduled maintenance.
So, all right. So this speaks to a broader question of people that have no confidence in the financial system, period. Right. So we shout out to Principal Travis. We're debuting our financial literacy curriculum right now in the Bronx.
Decoding the Matrix.
Yeah, for sure. And he was saying that they were in a school in the Bronx and they were teaching stocks to kids. Like, it's our curriculum, but like he's going through it with them, right? So it's talking about stocks. So he was saying that a lot of kids, you know, this is something that is a sensitive topic because in the Bronx, specifically in that area in the Bronx, most of the students are immigrants, right? So their parents is coming from DR.
Yeah. Their
parents is coming from different Caribbean islands. And a lot of their parents don't even really speak English, right? They have a tremendous distrust of American banking system.
Mm-hmm.
So they're like, okay, the kids is like, my parents don't even trust banks. You want me to trust stocks, right? So this speaks to something I think we should discuss as far as having how much confidence can you really put into a financial institution, right? Where like I've been robbed from a financial institution before, right? That's happened from Coinbase, but also my Chase account got hacked.
Yeah.
So what do you say to people that's like, well, this is why I don't invest in stocks, because why would I put my life savings into something that I can't see, and then I go online and then I can't access it for hours at a time? Or I could have my money in some, it's GameStop today. What stock will it be tomorrow? And it went up. But what if somebody crashes it, right? Like if one person has enough power to raise a stock 75%, another person has the power to crash a stock overnight just because.
Shout out BlackRock.
So what's the conversation to people that, have no confidence in financial institutions, and they use this as an excuse to not invest? Like, this is why I don't invest in stocks, because I don't believe in it. Yeah. And they're going, this. I've heard this before when we announced that Black people are investing at a high level. They're like, this is the plan. They're going to get all the Black people to put their money in, and then they're going to crash the stock market, and then they're going to leave you broke. That's a real sentiment that people have expressed. So what's the take on this?
Number one, if you have distrust for the financial markets or banks, you should. Number two, they're not going to crash their market to get us out of the market because they need us for liquidation. So I've heard that sentiment too. Now that we're in, it's going to be ruined. No, that's not going to happen. Now, will we have a correction of some sort? Yes. But we need to buy in correction levels and not when everything is being hyped. I get the distrust, but this is what I always tell you. Check your bank account every day, multiple times a day. Check your brokerage account. Read your disclosures. But if you're not investing in the market, I'm fine with that. But what's your vehicle to get 20, 30, 40% return on your money? If you hadn't checked, inflation is going up like crazy. And a lot of the times people don't want to invest in indexes because it's like, if I'm getting 9% and inflation is 12%, I'm losing money. I get it. But if year over year or over a 4-year period or half decade, your money is losing 15% of its value in 5 years. If you don't have a business or another vehicle to help it grow, what are you going to do? The value of the dollar from 1920 is went damn near down 90%. So you have to invest it somewhere. But having mistrust, you should. No one cares about your money like you. But if you invest in the meme stocks and you put your life savings into a meme stock, you deserve to get whatever pounding you get. I'm sorry. This is, and I get flack for it. Like, yo, you just hating gatekeeping. No, like, learn how to invest and trade properly. Don't gamble. Like, this is gambling. This is gambling. Like, and the other part that isn't talked about, like, Roaring Kitty can't make his way back into that industry. That's why he has to play these internet games. So you should have distrust. As my dad would tell me in boxing, protect yourself at all times. This applies here. But if you don't invest your money, what else are you going to do?
But a meme stock,
complaining doesn't make anything better.
Meme stock only is a meme stock because it's an influencer that's influencing it.
Yep.
What's the difference between a meme stock and a blue chip stock?
A blue chip stock is that it actually has real value. I was on GameStop actually 3 weeks ago with Xander. It was 3 people in there, including the person behind the cash register.
Yeah. But also the people that are influenced have more influence, right? So a meme stock gets influenced by somebody that's on Twitter. A blue chip stock gets influenced by Jerome Powell, president of Russia.
When you say Jerome Powell, those are economic catalysts or fundamental catalysts or technical catalysts.
Not necessarily. So let me talk. All right. So what's stopping China, Russia from having a full-fledged campaign to discredit, take down, even if it's 2%, that's billions of dollars of Apple, right? It's possible.
Yeah. And can we be Roaring Kitty worked at a hedge fund. He's not Logan Paul. But
I'm just saying, so if one person has that, like, anybody can have influence over the stock market. That's my thing. So it's like, it's easy to move this, but there could be smear campaigns at the highest level for legitimate companies, and it could work. and billions of dollars can be lost for no reason, not because the company's not a good company, because there's a group of people that, for whatever reason, they want to manipulate the price.
Yeah, but it's not gonna. So in that case, right, you're gonna see it.
That may work for 1 or 2 days.
Right, you're not gonna see a 90%, 100% increase on a mega cap company because of no technical reason or no economic factor that led to that catalyst or that. Whereas this is like, what is the reason? There is no reason. It's just that we saw a tweet and it's running up, and people are looking to say, all right, we can make money fast. Now, everybody likes to make money, great. But that's why, and it goes back to the original question you asked, and you led with it, but I think you led with the answer. It's the education around it. You don't feel as confident. There is going to be mistrust, and it should be. But if you get educated on why the mistrust even exists, then you have a better perspective. If you understand why this financial trauma exists, you'll have better perspective. When you understand long-term investing, when something moves up in a day or your brokerage account doesn't open, the few hours isn't, you're not even, okay, it didn't open. Yeah. Okay, how much money do I have in there? How much is insured? How much can I get back? How many brokerages do I have? Do I need to look at all? There's an education process that kind of eases some of those tensions, and that education process continues, right? So now even Ian saying, go look at the disclosure. I'm aware that, yes, they can freeze the market or they can close trading for specific equities, right? But can they close it? Now I got to go back and educate myself even more, right? So there's always an education process that makes you feel more confident if you're going to be inside the space. I think
since 2020,
the answer, I feel like.
Yeah, Rashad, back to your point about Russia and China. That's why I always scream Vanguard and BlackRock. And I know people hate it because they're like, yo, give me something else behind 2 Tech 2 Index. If I own part of Russia and China, you can't do a smear campaign against me versus something I own. Kendrick's not going to talk bad about Top because relationship and money's been made, right? Vanguard owns everything. Panama, waterways, music, prison systems, part of Apple, blah, blah, blah. So if you are investing in the biggest conglomerates, that is the moat. Like Vanguard is the virtual financial B613 from Scandal.
Vanguard, BlackRock, everything inside of technology, those two.
How I would answer it is this.
What are you answering?
You have a probability of getting screwed in anything in life. Nothing is bulletproof. You have a high probability of getting screwed some places. You have a low probability of getting screwed some places. So life is about mitigating risk. It's like
absolutely.
It's like getting married. You still have a probability of getting screwed by the person that you're marrying, right? It's possible. How do you mitigate the risk to kind of have low chances of that happening? But you still got to have your umbrella because anything can happen. So when you're looking at stock, this is why we say bringing this full circle. This is why we say invest in the S&P 500. Yep. This is why we say invest in ETFs. This is why we say invest in the largest companies.
Yep.
Because theoretically anything can happen. You can. I don't want to fool people and say like you can still lose your money, right? Worst case scenario. But in the worst case scenario, if every stock goes underneath and Russia finally pulls the big button, and well, we're all screwed anyway in that sense. It doesn't even matter. As opposed to the alternative of having hundreds or millions of dollars in cash, you're at more of a risk in there. You're probably going to get robbed. Or in the case of Nipsey Hussle and Black Sam, where they actually buried the money, Pablo Escobar, it got molded. That's not really the best way to go about it. Yeah. Real estate is not 100% safe either, right? We see in California where houses are actually falling off of cliffs. So you could put all your money in real estate, but you just have to be mindful, careful.
And they won't even insure some of them homes now in California.
Stop.
For sure. Even if you put all your money in gold, right? Well, that's still a security risk. You got to insure it. And we don't necessarily know for 100% that gold has to go up. It has traditionally gone up over the course of the last 3,000 years. But anything can happen. People can lose interest. We could discover a new precious metal that surpasses the need for gold. So anything is subject to loss. So you as an investor, your job is to actually find the things that mitigate risk the least, diversify, and proceed with caution that way, as opposed to having the most exposure in very risky assets that you have more likelihood of getting screwed over. But you can get screwed over in anything, just for full transparency.
Yeah.
But like I said, if the S&P 500 goes to zero, is it possible? Yes, it's possible. It's possible you could put $1 million in the S&P right now and you will have no money in 10 years. That's possible. But if that happens, then life as we know it is probably over, and
who has money?
Money wouldn't necessarily matter anyway.
Yeah, you've been walking dead.
But it's possible. So, like I said, it's just, I think we have to actually, speak on that, because anything is possible. But like I said, there's really no alternative that's 100% safe. There's nothing that you can do that you're 100% safe. So I'd rather go with the 98% safe, 97% safe, as opposed to the 27% safe, 16% safe. Now you're playing a very risky game.
Yeah, I think that's the cumulative answer, right? Educate yourself. When you have the education, make sure you take mitigate your risk, right? Yeah. If you have all those things in place, invest in long term.
Hold for 5 years. It's hard to lose if you're holding for a 5-year period. Most recessions last 2.7 years, and buy at the right price. Quit buying at the top of the market and then being upset.
Yeah, for sure.
So,
all right. Okay. Speaking of stocks, let's talk about Intel. Intel is down 40% year to date. After another rough week. We
told you.
We know you hate.
Hey, boy, who keep writing on my YouTube. You gonna say I'm right eventually or no? That was with ego. My friend on YouTube. Am I correct in my assessment yet? But today I got a trick for you. Go ahead, Rashad.
So what price would you load the boat on Intel?
So I think it's fair, if I don't like a stock, this is the reason I brought this up, to give context around prices you want to buy if you do believe in it. So if you write the Fibonacci from high to low, so the high on Intel is 75.83 back in 2000, crazy. And a low all time is 34 cents. The 23.6 would be 1804. If I can, and that's the low of 2008 and 2009. I'm not gonna lie, if they got to 1804, I probably will buy a lot. I still like TSM better. I like ASML better. I like Nvidia. I like AMD way better. No question. But if it got to $18.04, I do believe it can get back to the 50% retracement, which is 37. Pretty much double your money. Going back to probabilities and buying price, put in chat. The price that you buy determines your return. It's not just about the asset. It's about the price that you buy. So at 1804, I do like it. But if they get to that level, we could be in some trouble. We could be in a recession-like environment that they will announce. So 1804 is why I like it.
1804. I mean, another bad week. They lowered their future guidance. They were trying to have a deal with Huawei in China, Beijing. They said, no, we can't use those chips. Furthermore, reduce their yearly outlook. I read this on Kipling. This is interesting, man. You know how we always do, like, if you invested $1,000 in a company 20 years ago?
Oh, yeah.
Did you see this?
No, I didn't see it. Tell me.
Yeah. So, like, if we invested $1,000 in, well, Apple, let's say 20 years ago, it has gone up, 39,000%?
Some crazy amount.
If you invested $1,000 in Intel 20 years ago, do you know what the worth of that $1,000 would be today?
$450.
$2,000.
What?
$2,000, man.
I mean, you still got a positive return. Well, with inflation,
that's a good.
No, I'm saying 20 years. I'm just saying in that time frame. If you 1,000, yeah, I'm not. In 20 years, 1,000 turned into 2. Right? It's not a negative. But in that same, let me finish it. Let me land it. In the same time, if you invested that $1,000 in an AMD, and then, I mean, obviously Nvidia, right? If you did that in TSM, like if you picked a bunch of semis, super,
Starbucks, McDonald's, Home Depot.
I'm just talking in their sector.
Oh, in their space, got you.
You're talking about triple, quadruple in terms of percentage gain.
One thing I learned in life is that you can never lose by making money. Sometimes you miss out on things in life, but as long as you don't lose money, as long as you're making money,
So now
you can't go wrong.
Here's the question, right? If you put that $1,000 in today at that rate, when you see that AI is at the forefront of pretty much dominating every industry, what would that $1,000? Have we hit the point where it now begins to depreciate?
Yeah, for sure. Intel is probably not the company to invest in currently.
Nope.
We have a guest.
20 years ago.
Well, we got to tell it. I mean, they're part of the infrastructure bill, so we got to make sure that people understand that. All right.
Well, maybe the president can come on and talk about the infrastructure bill. We just spoke to the vice president last week. So, maybe we'll have a conversation about it. But until then, we have a guest this week. Bring our guest on. Kofi Bona. How you doing, my brother?
Hey, man, I am great. How are you?
Good.
I appreciate you.
Yes. Yeah. I appreciate you. So, yes, I'll give the audience that we actually got introduced by your nephew.
Yeah.
And good guy. We met him in Ghana, right?
Yeah, I think that's what you said.
Yes.
Yeah. He was saying that you got to get my uncle on. You got to get my uncle on, man. He's the OG. So we reached out and we was able to.
I paid him a lot of money for that.
Money well spent.
Good investment. Wealth, right?
Yeah. So, highly distinguished real estate executive, the CEO of Bedrock Detroit, where you guys have directed over $7.5 billion in investments to transform urban development in Detroit and Cleveland areas, correct?
Correct.
Yes.
Ongoing.
Yes. I know you've worked obviously very closely with Dan Gilbert for a long period of time. If you guys don't know who Dan Gilbert is, he is the owner of the Cleveland Cavaliers. He's also the owner of Rocket Mortgage. And I believe he's from Detroit originally, right?
Detroit. He's chairman and founder of Rocket Companies, which includes Rocket Mortgage, and certainly the chairman of the Cleveland Cavaliers and the chairman of Bedrock.
Yes, for sure. And prior to Bedrock, I know you spearheaded major projects at 5 Point Holdings in California, including San Francisco Shipyard. And you also have ventured into technology through Bona Enterprises. And you focus on fintech services in West Africa. And obviously, you're Ghanaian, correct?
I am.
And so this will be an interesting conversation across many different verticals. But first and foremost, thank you for joining us. Appreciate it.
Pleasure to be here. Thank you for inviting me.
No, for sure. So, okay. So we talked about, you being the CEO of Bedrock and you guys have deployed billions of dollars in capital. So how did you land at that position?
Yeah, it's actually interesting. As you pointed out, I'd been in California for a significant part of my professional life as a real estate developer, and I certainly had also been in Cleveland. But I left my position as the executive vice president and chief administrative officer of the Cleveland Browns in 2005. Went to San Francisco and was recruited there by a company called Outage, the largest home builder in the U.S. And I ran the San Francisco Bay Area office doing master plan communities. But I did that for about 10 years, and the company was spun off of that endeavor, which was called 5 Point. And 5 Point essentially took all the experience and diligence we had in building master plan communities in the urban community setting. And we begun to continue to develop, I should say, properties in San Francisco, Irvine, and in Valencia. And I did that for 5 years. We took that company public. I did that for 5 years. And then in 2020, I actually retired. I'd been at it for quite a while. And those of you who are in real estate development may know that it can be fairly taxing. And I can tell you that in California, it's doubly taxing. I can tell you in San Francisco, it's triply taxing. So I felt I had done what I needed to do and retired in 2020. But if you all recall, the beginning part of 2020 was also the beginning of the 5-letter word COVID. And so there we were retired with nowhere to go. Nothing to do, nowhere to go, and everybody sort of hunkered down. And it was about that time that I received a call from a headhunter. And I always joke that the only reason that I picked up that call was because I had nowhere to go. Otherwise, my wife and I would have been halfway around the world, maybe even in Ghana. But as it turned out, there I was at home, and the headhunter invited us to take a look at Detroit and asked me if I would consider becoming the CEO of Bedrock. And I frankly, initially, I turned it down. But again, after 2 months of, frankly, sitting at home, my wife and I decided to check out Detroit. And as I had just mentioned, I had spent a significant amount of time, about almost 8 years, in Cleveland. So I had a sense of Detroit. And frankly, the Detroit from 98 to 2005, when I was there, when I was in Cleveland, I'd been through Detroit, and Detroit wasn't doing that well. But my interest was piqued, and we flew out to Detroit. And I will tell you that I was very, very pleasantly surprised. This city was on the rebound. It had a certain energy to it, and but I had yet to meet the chairman, Dan Gilbert. So when I met, when my wife and I met Mr. Gilbert and his wife, we talked to him about what he was looking for in terms of this company and what his vision was. And when he explained his vision, is really bringing these cities of Detroit and Cleveland back to their prominence as 21st century world-class cities. It resonated with me, and that's essentially why I decided that I would indeed, as I say, get off the couch and take the helm of this wonderful company. So that's how I ended up in Detroit.
So we got to say thank you for getting off the couch. That wasn't an easy task. We've been to Detroit. Shout out to everybody in Detroit. We get a lot of support there. We've been there. I wonder when you took on the task, looking at it, right? There's the downtown area where we know that Ally and Rocket Mortgage, and we can see all the infrastructure being built downtown. What was the plan looking at it from a 5 to 10 year standpoint of how we revitalize this? Is it we start here and build out, or do we build out? And like, what were you guys looking at before you said, all right, I'm taking this task on?
Well, candidly, the folks who had been in before me had done a tremendous job, as I say, building up Detroit, and I think there's no question that the cities developed from the core downtown out, primarily because the downtowns are the biggest revenue generators of any city. And the revenue generated from the downtown is fundamentally what funds a significant amount of the services for the rest of the city. So a downtown that has declining tax revenues is a downtown that frankly can barely sustain the quality of services required for the rest of the city. And so I think it was very obvious that the downtown areas of Detroit needed resuscitation. And that's the work that had begun before I got here. And being here, I think, has been very clear that not only do you have to build the physical elements of a downtown, certainly, and we take pride in the fact that we're able to take these classic buildings, renovate them, re-energize them, and frankly, repopulate them. But it's also just as important for us to think about the spaces in between the buildings. And those spaces belong to the whole city. And those are the spaces that we create activities and energize those spaces to ensure that folks in the broader city will have a reason to come downtown. And we've been spending quite a bit of time doing that in the public spaces and places between the buildings. To the point where we had a roller rink downtown. We created a wonderful sort of winter festival area downtown. We also support major national and international events. We're coming up soon to the Grand Prix. Detroit Grand Prix is coming downtown. We followed quickly by Movement, which is a electronic music festival And then soon thereafter, we are bringing in the Afro Nation Festival again to really invite the rest of the world to come to Detroit. And in doing so, I think refresh their memories of what a great city this is, and perhaps just encourage them to maybe think about a relocation into this city.
Yeah, we're seeing a seismic shift in California, and Detroit and Nashville are on the upswing. Like, what are some of the biggest challenges that you're facing when trying to revitalize or re-energize a city like Detroit? And go ahead.
Yeah, well, part of the the real estate economics is often driven by obviously capital. The deployment of capital is critical, and it takes a visionary and a wealthy visionary at that, like Dan Gilbert, to literally put that much effort and energy and resources into the downtown areas, like certainly as we're doing in Detroit and as we are planning to do in Cleveland. And the difficulty is in trying to convince others to come along because candidly, these are longer term bets. These aren't the 5 to 7 year quick return on investment, turn the money around and go do some other thing. This is really taking a bet that reinvesting in the core community will create long-term dividends, which are actually stronger than the quick 5 to 7 year turnaround. And it's not always evident, candidly, to analysts. It takes a degree of belief and understanding. And Dan believes in something he calls sort of the Big Bang Theory. Because you're often asked, because you are beginning to ask, what do you do first? And unfortunately, there is no first, second, third, fourth. It's you got to do all of it. You have to revitalize, rebuild the older buildings. You got to build new buildings. You got to build the spaces in between the buildings, and you've got to attract energy and activities into those spaces all at the same time. It's tremendous amount of capital required to do so. And that capital isn't necessarily coming from the Wall Streets until they are sure and assured that they can indeed make their money back on shorter returns. And so we're in that process of proving the point that investment in these kinds of endeavors ultimately will create much greater returns over time.
So let me ask you, you've obviously, even before this, commercial real estate, you've been in real estate for a long time as a real estate developer. Commercial real estate is something that, is an interesting topic right now, right? And we spoke with Barbara Corkin, and she felt like the commercial real estate crash has already happened, at least in New York, right? But then I read somewhere that commercial real estate is actually coming back in New York. So there's millions of office spaces throughout America that
and somewhere in between there's the truth, right?
Yeah, for sure. So how do you feel about the current state of commercial real estate in America, as a former real estate developer yourself?
Well, I think it depends on where you are. I think the stories of the demise of commercial real estate, I won't say exaggerated, but certainly they're a point in time. And one of the things I've learned being in real estate, as long as I have, that cities evolve. They evolve, or should evolve and adapt to economic circumstances. And there is certainly a lag time between the creation of the facility to accept that particular economic unit that wants to go in the building, and the time that one starts, once one determines that there's a need. And unfortunately, we are in this sort of juxtaposition between we're still suffering from the effects of the pandemic in terms of hybrid work from home situation, and yet the assets and the facilities aren't really built to necessarily accommodate how people want to work in the office. And as such, there are offices still focusing perhaps on a 2 to 3 day work week. And so they may feel that they have excess office space. And as such, they're shrinking their footages. And yet at the same time, those who are renovating and rebuilding new office space, or creating different kinds of offices, different kind of office spaces that are highly amenitized such that people who do come to work actually want to be at work. And as I say, it's not just what happens in the buildings, it's also what happens around the buildings. Cities should come to the table and thinking about how to work with the real estate developers and the landlords to re-energize those downtowns so that folks actually want to be in the downtown area and actually come to the office. So so I always say, it's easy to take a point in time of any city and say, this is great, and sort of full stop. But you have to go back 20 years and then look forward 20 years and say, what's the evolution? What look like? And I think that we are at this point in time that certainly things don't look necessarily great, and certainly as the leases are coming to an end, there's no question that there are a number of companies that are reassessing their office needs, and as such, they may be shrinking. But in places like San Francisco, for example, there are also the growth of office need in AI space. So they may be beginning to take up some of that space. Is the pace commensurate with the reduction in space? Well, probably not. And I think refinancings over the next 3-4 years will candidly create a challenge, no doubt about it. But if I take the long view, as I think we have to in real estate, if you take what I would call the city builder's view, you got to invest in the assets and convert them to try to match what you consider to be the needs of the market will be. And if one does that and one has the capital to do that, I think things will evolve in a positive fashion. There are many areas in cities over the last 30 years or 40 years even that have undergone what we call in California the redevelopment process. And in that process, it was literally taking areas that the market economies had abandoned, creating significant public-private partnerships in those areas to revitalize and re-energize and almost redesign and reinvent those areas to fit a more modern economy. And over time, those areas have actually, in many ways, have begun to outperform the more traditional core areas of the city. Mission Bay and San Francisco is certainly a classic example. And for 20 years, it had a great run. And certainly right now, it may be feeling the effects of the post-pandemic and hybrid work from home situation we're discussing. But I believe that 20 years from now, we'll look back and find that other businesses have replaced it, and maybe some of the buildings have been converted to residential or something else. And I think it's that constant need to think about what could be next, and then finding capital to invest in that to ensure that you're not just stuck in the moment, so that cities can indeed evolve into the economies that seem to be most attractive.
Yeah, I mean, that sounds very familiar, even to the stock world, right? You're looking at a long-term perspective and actually looking at the life cycle of a company. We talked about this a few weeks ago of how long can a company be dominant? Well, how long can a city be dominant? What are those factors? I want to peel back just a little bit because obviously you're well established in the world of real estate development from Ghana, but there's a stop here that has a sports story to it. So how did we end up as the chief administrative officer for the NFL? Spent 7 years with the Cleveland Browns. Is this during the Roger Goodell tenure as commissioner, or is this like Paul Tagliabue times? When is this happening? How did we end up there?
How did that happen? I get asked that a lot, as you can imagine. But it's actually such a linear story that it's actually not a mystery at all. My last public position was as the chief economic advisor to Mayor Willie Brown of San Francisco. So I was a public official working for Mayor Willie Brown. And at that time, this is in 1996 or so, at that time, the city of San Francisco, or the mayor's office, was challenged with the notion that the 49ers could potentially leave the city of San Francisco. And as you no doubt, no gentlemen, no mayor wants to be the mayor that loses a sports team if they can avoid it. And William Brown was no exception. So he charged me with the responsibility of working with the 49ers to try to find a way to retain them. And he was successful in going to the ballot to raise about $100 million at that time to invest in the new stadium. So that was my role, the day-to-day liaison between the mayor's office and the 49ers. In that time frame, the Cleveland Browns upended and went to Baltimore, became the Baltimore Ravens. The city of Cleveland sued the NFL. The NFL ultimately agreed to reestablish an NFL team in Cleveland. And the CEO of the 49ers, who had become a good friend of mine, became the CEO of the Cleveland Browns. And one of his first official acts was to invite me to become the chief administrative officer to run the business and support in building the stadium in Cleveland. And that is how I ended up in Cleveland.
That's incredible. But back to real estate, really quick with California, outside of COVID and people having a desire to work from home, like what went wrong that led to like the collapse of the value in California real estate and like the mass exodus? And as a city builder, do you think about those things that went wrong so you can make sure that those mistakes don't happen in Detroit and Cleveland?
Well, yeah, Ian, it's almost 2020 hindsight always. Right now we can all seem really smart about looking back on what happened. But if you think about it, there was a significant concentration of effort around tech and tech space. And there's incredible competition among tech companies to get into the next best space as they were vying for the talent. Talent acquisition was probably the most important thing in San Francisco, and talent acquisition meant that we were creating places that these youngsters would want to be. And that was the focus of all city building efforts. Nobody knew at the time that there would be an opportunity for these youngsters at some point, or these employees at some point, to actually work from home. And when the pandemic happened and people evolved and situations evolved rather, and folks had the opportunity to work from home, they actually enjoyed the freedom that it gave them. And it is obvious that it made hiring a lot more difficult. So companies were much more relaxed in what they were asking of their potential employees and providing more leeway for them to work from home. And then there were technological tools that enabled people to work from home. So all of a sudden, as you can see, there was a significant amount of office space that was essentially vacant. Yeah. But in the prospect of building up cities that would be exciting for employees in the downtown location, cities created a great deal of amenities down there. Restaurants and services also came downtown. But those services absolutely required on those 9 to 5 employees. And when those 9 to 5 p.m. employees didn't show up, those services frankly suffered. And as they suffered, they closed. And when they closed, the downtowns became even less desirable. So nobody really wanted to come downtown anyway, because there was nothing going on. So it's almost a negative feedback, if you will, from that whole point of why would you come to worked in an empty office when your favorite, and where your favorite restaurants or coffee places no longer were open. You wouldn't. You just stay at home and work. So I think as we look back, again, perhaps too much focus on one particular industry, but that was driven primarily by markets, Wall Street, etc. Yeah. Two, I don't think we ever paid enough attention to the variety of places and spaces in the downtown that would attract more, that would be more attractive to more than just the workers, so that folks would feel like you're actually creating 18-hour cities that had not only the entertainment, but also services downtown in a manner that folks would always want to be downtown. And certainly, I don't think we created enough of the public-private partnerships necessary to activate those downtowns in a manner that would because you constantly have to work at attracting people to come to a downtown core. And certainly, I know when I was in the city, we didn't pay enough attention to the effort that takes to ensure that would always be a core part of the city experience. We relied primarily on the private sector to do what they would do, and they were subject to the marketplace.
So, switching gears a little bit, you had mentioned earlier that you took a company public, and I think after that, was kind of like when you retired for a little bit, right? Like, can you talk about that as far as the process of actually you experiencing that in that moment? Because very few people have an opportunity to actually reach a point where they can take a company public, and what does life look like for you at that point in time? Like mentally, did you feel like you accomplished enough, or did you feel like you just wanted to just figure things out for a moment until you just hit the reset button to move forward?
Well, that's a great question. I don't think I've ever been asked that question. I think there, at the point in time that I made the decision to retire, I had begun to invest in, and we had created a company called Tech Golf in Ghana, and I was also pondering a development in Ghana, and so that's one. Two, the primary project that I was working on in San Francisco was beginning to hit some fairly significant political roadblocks. And I had been with this project for almost 15 years. In fact, I'd taken it through the full entitlement process, and I had actually also taken it through 2 ballot initiatives and one, which is fairly difficult in San Francisco. So I think I was at that point in time when I said, perhaps this is time for somebody else to continue that journey, and I could perhaps begin to think about spending more time in Ghana and seeing if I could bring some of the experience and maybe resources I had to Ghana. And it was, and I candidly, it's a good question, because I also thought perhaps I might also have something to share. Maybe I'd write a book or something like that. And if you gentlemen will recall, around in February and March, this country was had a significant amount of civil disruption, primarily around George Floyd and then Breonna Taylor, and it was a very difficult time. And I will tell you that watching the news and as I said, in February and March, and just the amount of civil unrest that was going on throughout the country, and mostly in the urban areas, it made one reflect. What could somebody who, like myself, who had been in urban development all their lives, either from the public sector, other than the 7 years, I guess, with the Browns, or in the private sector, what could we potentially have done differently? And so it was a moment of reflection. It was a moment of reflection. And, often you find that you are bound by the rules of engagement of any profession you're in. And perhaps those are the wrong rules. And so those are the kinds of things that I had an opportunity to reflect upon. And it just so happened that as I was reflecting on it, I was, as I said, recruited by the Gilberts. And in my conversation with Dan and Jen Gilbert, it was clear that their fundamental commitment to urban development, the redevelopment of Detroit and Cleveland, had a strong underpinning of their philosophy to do things for more than profit. And candidly, that resonated to my heart and certainly my mind, and was one of the key reasons why I, again, got off the couch.
Yeah, I wonder now, sitting in the seat that you're in as CEO of Bedrock, Detroit is known for being the motor city, but industries change, sectors change. Sitting where you're at, and I'm hearing you talk about opportunity and the quote, more for than profit, it speaks to me about community and given opportunities to all. And so I wonder, when you got off the couch, you took this role. I mean, you didn't have to, but you did. Was it primarily to provide opportunity? And what's the end goal? Is it to say, yes, we've now created a sector here where we provide opportunity in the world of real estate? Do I move on to another city to see if we can replicate it? Or I want to make sure that this city here and everybody in the 313 thrives and know that this is a city that is on the rise?
Well, I think first I always go back to the fact that cities evolve. This is a moment in time where I believe I have an opportunity and candidly the ability to create a template, perhaps, that others may wish to replicate. I mean, certainly, I think Dan Gilbert's for more than profit model is one that one would hope that others would replicate.
What does that mean for more than profit? What does that mean? For more than profit, it means you don't have to just look at the bottom line. You just don't necessarily have to look at spreadsheets and convinced by what the spreadsheet says. You have to also think about the long-term impact of what is being done. And if you do it right, you will get your profit. You will get your profit, but you can't just look to the bottom line. And I think that's beginning to play out here in Detroit, and I'm pretty sure it will play out in Cleveland. And the fact of the matter is, you also need a very strong public partner. Don't get me wrong, because you do need a public partner to help leverage the private capital that you're putting in. But again, it's a longer term view because you're thinking about the fundamental social infrastructure in addition to the economic infrastructure. And that's you can't just look for 5 to 7 year returns. Well, frankly, if you can, it's just a different business. Let me put it that way. And people do that all the time. But he's done pretty well with his for more than profit outlook.
For the young professionals that want to get into urban development, what advice would you give them, and what roadblocks would you have them avoid in their career, if you can guide them?
Well, urban development is very broad, right? I happen to have had the pathway where I started as an architect and then as a planner, and then fundamentally in the public sector for many years in a variety of different roles, understanding how cities work and how cities are funded. And then I got into the private sector, working in creating and working within public-private partnerships to take bigger long-term bets on urban development. I would suggest, I always say this to youngsters who are interested in maybe following portions of my path, first really understand how cities work. How do cities get their capital? How is it possible to leverage taxes? Municipal finance is one of the strongest tools that we've been able to use to leverage our private capital. And it's not just us. I mean, other developers use it too. But it is, I think it's an extremely powerful tool when joined in a public-private partnership. So that's the first thing I would say. And secondly, look, if folks want to frankly just be real estate investors and do, the odd real estate development here and there is a pathway for that. That's just not what I do. That's not what I do. It doesn't interest me to do that. But that's all. But there are a lot of developers who work throughout the country, and they work on single assets throughout different cities, and they do very, very well. And I'm hoping maybe to attract some of those to work with us on some of our assets here. But we tend to focus on, as we say, very specific long-term plans within cities. And we're focused on 2 cities. And the 2 cities are primarily because that's where Dan Gilbert has invested significant capital already. He invested significant capital through the Cleveland Cavaliers in Cleveland. And so we have a fairly, his other rocket companies have a base in Cleveland. And so we believe that city should grow with us, him, the rocket companies. And of course, Detroit downtown is his hometown, and Detroit is the location for rocket companies. And so again, we believe that we should participate in bringing Detroit up with the citizenry of Detroit. So, but back to sort of the second part of what I think is important for folks who are interested in urban development to understand, and that's the importance of active listening in the community. The community has several voices, which is a great thing. The diversity of opinion is critically important, but you have to have an ear to hear it. And you have to have community partners to help filter it. And then you have to have the city partner to help execute, so that you're constantly thinking through how you can help build up the community in this process. We go out of our way to find stellar examples of local entrepreneurs in community neighborhoods and see if we can use our platform and our framework to highlight what they do and bring them into our facilities, bring them into prominent spaces in downtown. In Cleveland, we have a number of community businesses in the Tower City, and certainly in downtown Detroit along Woodward. We create opportunities in our real estate portfolio to showcase local entrepreneurs and local businesses. As we do so, we find some of them actually thrive and raise their profile far beyond what they had perhaps in the neighborhoods. And I think that's important too, as a part of just community and civic pride, to show that Detroit has these wonderful, wonderful businesses, and all they're looking for is an opportunity. So the ability to create that opportunity for them, I think, is critical to the urban development framework.
Well, Kofi, thank you for your time. Before you leave, my personal last question is about Ghana.
Yes.
So we've been spending a lot of time in Ghana. We was there in December, then we were back there a few weeks ago. So, just learning the in and outs of the culture. I've learned enough to understand that. I think you probably were born on Friday, right?
I was.
Yeah.
That took you. That's not fair. You went. How many times did you go there to find that out?
Only took once.
Only took once. There you go.
But
that's exactly right.
One of the things that we saw obviously is the development, right? So many different apartment buildings being developed, and there's such a strong interest from the diaspora, especially America. People coming there, people coming during December, but people also relocating. We met a bunch of business owners that moved from America, that started restaurants, that started different types of businesses, and now they're residents of Ghana. What's your thought process on Ghana currently in 2024? Like, what are you optimistic about? What you have some concerns about? You as somebody that's you've seen it from where it was to where it's at now. I'm just curious to know what your thought process is.
Yeah. We always start with the positive, right? I think there's tremendous interest and positive interest in Africa as a whole, but specifically in Ghana, and that interest is driving some curiosity, enough curiosity for folks to get on a plane and visit it. And often when they visit, they are enthralled by the people and the culture to the point where there is consideration for investment. And look, Ghana needs a lot of foreign directed investment. And so folks of their own accord bringing their capital and their ideas to invest in the country is tremendous. Tremendous because that obviously boost the economy, and most importantly, creates jobs. I'm optimistic that the educational structure continues to really bring forward some really smart individuals, entrepreneurial individuals that have been able to sustain the country for a while. And however, unfortunately, they are so good at what they do, perhaps they are drawn away by the fact that they are so good at what they do that there is significant brain drain going on. A significant amount of the health professionals in Ghana are trained in Ghana and then they leave. And that's concerning, but somewhat understandable. I'm pessimistic because the fundamental infrastructure of the company requires a great deal of work. And that, I mean, the social infrastructure, while strengthened through the traditional heritage and culture, is weak when it comes through the sort of the social service networks. And people are exposed as the global economy suffered over the last several years. These fragile economies in the third world really took a significant hit. And that hit has a horrible residual effect on the folks at the bottom of the scale who are having to work 3 times as hard just to get, frankly, the same amount of income. And that is unhealthy. And therefore I worry that the gap between the haves and the have-nots only increases. And my fear is that the governmental institutions haven't built enough bridges, and in fact are so focused on sort of top line growth in terms of attracting more investment, foreign directed investment, tourism, etc., without necessarily finding ways to shore up the fundamental infrastructure of the economy, either by building those infrastructural pieces that would help transport or could create much more of an industrial base in the country. We're still exporting. You're taking it out of the ground and exporting it, be it either cocoa or gold, right? Exporting it for the most part and subjecting it to the world market prices. After 50, 60 years, we're still essentially doing the same things we did many, many years ago or decades ago. And that's not sustainable. So I worry that the gaps between the haves and the have-nots only increases. And we're still somewhat in a subsidized era. And I'm terrified of the World Bank and IMF policies and what they ultimately might do to the country.
My final question, Kofi, is, and thank you again for joining us, is I heard you say we have to focus on how cities work. And I thought that's very interesting, right? Because most people don't look at it from that perspective. How does a city work? Where does it get revenue from? And so when I think Detroit and I'm thinking sports, I want to talk about the intentionality, right? If we look at from the landscape of their sports franchises, they've all moved downtown, right? Where you had the Pontiac Dome, now you have Ford Field, which is downtown. You had the Tiger Stadium, and now you have Comerica Field. You had the Palace where the Pistons played, and now you have Little Caesars where the Pistons and the Red Wings play. And so I would imagine the revenue that's brought in from having people come in, the tourists that come in, right, and the taxes that come from that. How important is it to have sent like a focused effort to have something concentrated where rather than have different counties and different towns collecting the taxes, having something central to where downtown is, obviously being a thriving part of a city?
Yeah, it is critically important when, as you're trying to build up an economy, you want every dollar to go round and round and round in that in a concentrated manner and create a virtuous cycle of investment. And so these sports teams the sports teams downtown create a year-long event, for want of a better term, right? Event in that If the Red Wings aren't playing, the Pistons are playing. If the Pistons are playing, the Tigers are playing, and then the Lions are playing. And that brings people who wouldn't normally come downtown to come downtown. When they come downtown, they park, they may grab a bite, and that dollar they bring just helps sustain the economy. It's critically important because those dollars, that density of investment, that density of expenditure is what you use to convince the next business to come into the area, because then you can say, look how many people come down on a regular basis, and then that particular entity you're trying to attract will indeed say, well, if those are the numbers that are coming downtown, I can get X percent of that by virtue of the business that I'm in, I will make that choice to come downtown and fill yet another vacant spot. And that person will then attract its own people. And so it goes on and on and on, but it has to be very intentional. And in addition to just that process, you also have to create these larger, perhaps seminal events that sort of break through the fog of what people might think a city might be, like a Grand Prix that everybody will now see Detroit in its splendor on their TV sets, like the draft, the NFL draft, and 800,000 people coming downtown, but 53 million eyeballs looking at Detroit, perhaps for the first time, thinking, wow, that's a beautiful looking city, and recognizing that it's nothing like they thought. As I say, I think the critical word you use there is the intentionality behind it. It's not formulaic, but it's intentional. And it is critical for us to ensure that people are coming downtown or coming to Detroit and having a great experience in Detroit. Because when they take the word back, either to their employers or their families, perhaps it just changes that perception. And when it changes that perception, they might make a decision that they wouldn't maybe have made a month prior, that they would add Detroit to their list, perhaps to come see the Motown Museum or the Detroit Institute of Arts, which is a fabulous museum. They just add it to their list, and that's just one more person that you have the ability to win over. One more person that comes in and spends some money in a downtown area, and therefore provides some opportunity for a local retailer or business to transact business. And the more that happens, the easier it is for us to go talk to a business and ask them to come locate downtown, because we can then assure them that when they are downtown, their employees will enjoy being downtown, because the downtown is active, is amenitized, and has those kinds of family-friendly activities that they would look for in any thriving major city, and frankly, dare I say, world-class city. And that's why it's so important to be intentional about bringing these essential components together.
My final question for you, you're a very wise and smart man. Are there 3 or 4 books that have had like a profound impact on your life? And if so, would you be willing to share some of them with our audience tonight?
Sure. It's there was a time when I was a younger man, and I happened to be the city manager of the city of Oakland, and I realized that as a department head, then all of a sudden I was a city manager and had 3,000 employees, and I realized that I had to communicate constantly with the group to try to get folks to understand what I was trying to do. And there was a particular book, and there were so many different circumstances in which the communication was critical. And there was a particular book called The Fifth Discipline by Peter Senge that I read, and I still read to this day. And it's like, I don't know, I think it's a great book because it's simple. And it just enabled me to think about what I was trying to say and provide a business context for it, an explanation for it, gave great examples, and it just helped me communicate. But probably most importantly, it helped me order my thoughts. So the fifth discipline is certainly one. Then, as an executive, I don't know how I stumbled on this book. There was a book called Why Smart Executives Fail. It's by someone called Finkelstein, I think. But it was a fascinating book because it just chronicled all these companies that were very well known and rose to prominence in our psyche, and yet they collapsed. And the author explored why they were collapsing, and it was essentially a lesson in what you don't do in order to sustain a winning culture in an organization. And I thought it was just tremendous, and I took the lessons to heart.
Well, thank you. And well, last thing, because you guys are like essentially playing Sims, right? Where you're building pretty much. You're starting with it, especially. I haven't been to Cleveland, but Detroit is a great market for us. We go there a lot, and you have like a blank canvas, and you just probably building what you want. I'm simplifying it, but this is something I know the audience is going to address, and rightfully so, right? Where you take a city like Detroit, which has a rich history, and I believe it's like 60 to 70% Black. 85% Black.
Another great attraction for me.
The word that comes to mind when you think of urban regentrification is gentrification, right? And that it loses its soul. You lose the core of the city. People get priced out, and the place that people once knew is no longer. So the last thing, if you want to talk about that aspect of it, because I'm pretty sure that's something that people might have some questions or concerns about.
Yeah, no, that's a great question. You can imagine that in my profession, it's followed me in many ways, anywhere I've ever worked. And the noted look, gentrification, or more specifically, the way you described it is when development happens around a particular area to the point where folks who live there can no longer afford it and are forced out. Does that happen? Do the economics play a portion? Of course, yes. When an adjacent building is brand new and it immediately begins to charge more than the rents of an existing building place that probably has obviously is lesser amenitized, it does create this situation where the person who owns that building then starts to raise the rent, and some people obviously have to move out. And I say there's so many, we could talk for hours on this, candidly. And the question really, I think you have to ask is that a normal process that happens anyway? Is it accelerated when economics change in an area for the positive? Would we rather there wasn't investment in those communities? And I think, that the answer, is probably unsatisfying in some respects, but the answer is you have to have new investment. You absolutely have to infuse communities with investment. You have to repair and replace the older buildings and the older structures. And you also have to have the mechanisms in place to try to provide support for those who are there, so they can continue to be there if it residential. And you also have to provide opportunities for those who are there so they can grow their businesses there. It's about production and preservation. And those two things have to work together. And the fundamental question is, who's responsible for which part of it? And I think where it works best is in that public-private partnership, where those entities that do the best at either of those two pieces are given the resources, capital, and frankly, authority to do just that. That is, those who know how to produce the new, to energize and re-energize, should be given the support and capital to do so. And those who can, but now when I say preserve, not only preserve some of the existing buildings, but also preserve some of the social structures, they also should be given the opportunities and the capital to do that in tandem. Has to work together, because no investment creates disinvestment. And investment creates undue pressure on certain portions of the population. So the thought of investing in both production and in preservation working together, I think, is key. And that's what we're trying to accomplish here in Detroit and certainly in Cleveland. And often this is accomplished through a vehicle in the public-private partnership called a community benefits agreement, which will lay out both the private return on investment and the public return on investment. Where the private return on investment ultimately will show how private equity can return back to the private sources. Public return on investment is the preservation of the community, both socially and in some of those social structures that are beloved.
My final question, really quick, as a follow-up, because I know it's a question everyone wants to know. Like, when the cities are, let's say, in 2010 or 2008, the development was not there. How can a community get involved to be able to invest, to buy back some of these assets, and we as a community become owners of them?
Yeah, there are actually some really interesting structures that are being created, and certainly Detroit and in Cleveland have some wonderful organizations that focus on accessing capital to do just what you outlined. But again, often it comes through philanthropy, and philanthropy is absolutely great because it's part of that preservation sort of mechanism. But some private developers have been able to attract capital and use that capital to purchase slightly smaller developments with the specific idea to be private developers to generate capital and return on their capital, but also to preserve the neighborhood. And I think that's the underlying thing, that if this is to be replicable and sustainable, there has to be a return of investment back to those community investors. And sometimes they also get in the same, frankly, conversation as the bigger developers, because people don't necessarily recognize how important it is that there is a return of investment back to those developers, because that's how they will sustain their business. Their mission is to create more preservation, but they also have to do it in a manner that can make money. That way, you know, it's sustainable and it's replicable, and it doesn't rely just on philanthropy.
Well, thank you for your time.
Appreciate
it.
Yeah.
And yes, keep up the great work. Thank you.
Thank you, guys. Thanks for having me.
Have a good one.
Thank you.
Wow.
Yeah. And I think even when we talked about the centralization, like, it creates economic opportunities. And we spoke to Mario Kelly. Because those stadiums are built, now he's able to create a business, a staffing agency that actually cleans those fields. Like, he has a contract with Ford's Field, and he has Comerica Park, and he might have Little Caesar at this point, but now he's able to employ thousands of people from the city of Detroit. So, you know, we just got to figure out ways to figure out economic opportunities inside these events.
Absolutely.
Shout out to the great city of Detroit.
Yes, 313.
What up, Doe? What up, Ken?
I haven't been to Cleveland, but shout out to Cleveland also, Beyond Wind and the whole team out there.
Yep.
Invest in Detroit and invest in Cleveland.
Shout out to Detroit fam.
These guys have put $7 billion into the city so far.
Mm-hmm.
And like I said, they kind of playing Sims in a sense. If you go to Detroit, downtown, Dan Gilbert, he owns everything. And even when he doesn't own, we're talking to Ally, and they were saying that, one of the first calls when he decided he wanted to kind of rebuild Detroit was to call Ally and to say, like, I need you guys to stay. So
don't leave.
And some people might think that would be a competitor, because they're a fintech company and he has Rocket Mortgage, but he looked at it like, he needs other people to be in Detroit as well, not just himself. So he called them, and they've been going crazy. Detroit's actually one of the hottest real estate markets over the last 10 years.
Yep.
For the entire city. So it's not by coincidence. These are plans that's put in place years in advance, billions of dollars. Programming. He talked about quality of life things as far as like having dog parks and different stuff of that nature. Even me, I'm consulting a city currently, and
that's on the way to the governor.
Slight flex alert! Slight flex alert!
Shout out to the guys. Nah, I'm consulting.
In other news,
can you say what city or no?
Not yet. But am I amateur? Because I'm not Don Peebles by any chance, but I might consult with Don Peebles on
it. Good, yo.
I gave my point of view. I think that's when you look at a city, it has to have other quality of life things, as far as a park, as far as a mall, water fountain, graffiti park, skating ramp.
Yeah.
These are all things.
Bike paths, all these things.
These are things that these quality of life things. So I thought that was interesting when he said, like, in between buildings, they make sure that they have those parks and different things, and monuments and sculptures and art, different things of that nature. Just kind of keep the vibe.
Attractions.
Yeah. Something's always happening. Something. It could be a convention. It could be a concert. It could be a meeting. Something's always happening, and you appreciate it more when you come from like a New York, and it's like, well, people come to New York and they're like, well, where the Yankees play? And we're like, oh, that they play in the Bronx. Or where the Mets? They play in Queens, and they play in Jersey. When you have everything central, like you can walk to and from places. Like even Fox Theater is downtown. So even if there's an event, if we were down there doing something, that's walking distance. Everything centralized makes everything a lot easier. Shout out to everybody in Detroit.
Shout out to Detroit, yo. Love you all. Content point based off of what Rashad did. Point of bragging, and then come down with the humility. This boy good, yo.
In other news.
Just content play.
Nah.
Brag on the mountaintop, then come down to the valley. Ooh, boy.
Oh man. So
good.
Invest in Detroit, man.
Yeah.
City looks promising.
Okay, what up? What up? We didn't even say what up though. Detroit, everybody, all our people out there. Bravo, all the team.
Oh yeah, we got a lot of people in Detroit.
Chill, what up?
Detroit, D-Town, man, that's always been a good market for us, man. They show us so much love every time we go out there. Good energy, good people out there in Detroit.
Solid, super solid.
Yeah.
Very good.
And I think one of the most important investments over the next 5 years, we won't have to talk about the passport thing, but selection of where to build in another city, key over these next 5 years, yo. Very key. Pick a city, one that you can build in, help eventually dominate in a good way. Please, I picked my city in Mexico. Y'all Ghana. Rashad consulting the city right now. So
yeah, for sure.
I see governor.
City consultation fee.
Gotta
diversify
your portfolio. That's a fact.
Have to.
That's a fact. I mean, we could talk about it on Blackout as far as passport increase situation.
It's a real thing.
Yeah,
it's a real thing.
Exit plan strategy. The exit plan strategy. Passports have gone up, I think, 40%. Dual passport registrations for American citizens. We posted it yesterday. CNBC had did a piece on it. And maybe that's something. Oh yeah, Blackout, 10 o'clock on Wednesday. Make sure you tap in.
Please.
Because the passport bros, they done ran it up already.
Y'all getting ran out.
I know passport bros is coming up.
The passport Rizzos, shout out to y'all.
Safe out there, safety.
Shout out to y'all. Y'all going to Colombia and finding Colombiana.
It's nasty out there, man.
Hey, getting robbed. Be careful and step your game up here. Like, come on, man.
But shout out to, I guess, very distinguished person. He
amazing.
He ran the city of Oakland for a while, and then was
San Fran
consultant for San Fran. Took a company public, Then he was chairman of the Cleveland Browns, and now he's running development for the city of Detroit and Cleveland.
Yeah.
CEO deploying $7 billion of capital.
It's a hell of a resume.
Yeah.
Yeah. Yeah.
Shout out to his nephew.
Yeah. Tui, what up?
Tui, I saw a guy from Ghana. Appreciate it. All right. Before we leave, any trading tips?
I think the one thing that I would really want to stress this week, I've talked about it before, selecting a short target, selecting a long target, number of trades. But I think you need to find a secondary asset to trade that can give you a high probability win. So like most traders on the futures market, they either love ES or NASDAQ. I gave EMD, but I think you need to look at gold. Rashad, you talked about it earlier, like the value is increased. But wait till y'all find out that all that gold not in Fort Knox, but that's another conversation for blackout. But find a secondary asset that you can trade because like one is too close to none. So hypothetically, if the volatility like on AMC today went up incredibly high, if that happens on NASDAQ, you'll be priced out. Find an asset to trade at close, like gold, crude, UB, to trade at the close. So if you are trading ES and NASDAQ at the open, find a secondary asset to trade at the American close or London open to get you some more wins in the market. Because you don't want to keep, like hypothetically, if you win on NASDAQ and you win $15,000, you don't want to give all that money back or half of it back. Find an asset that does not move as fast, trade that at the American close or the London open, so you can like bolster your gains to be able to be up 200, 300% in a quarter or year overall. So that's my trading tip of the week. And InvestFest, I will be doing a presentation on live trading on futures. So be there early. Can I request the afternoon slot, please, kindly? Because if I'm gonna do Blackout Friday, I'm gonna be tired.
Oh, you want afternoon?
You please.
Or Sunday?
Yes.
Okay.
Close mouth.
And if y'all was mad at Daniel put that money out on stage, I don't know if you want me to announce it this week. I may wait to June, but I'm gonna do a cash giveaway.
More.
In true form, like I've been doing. I did LA Market Mondays, you know.
More paper.
Cash
More
King.
paper.
Yeah. Yeah. But we got to keep adding more value. They say we got to get back to the old us, right? So in true form, cash giveaway at the end of the presentation too.
Let's do it.
For sure.
We got before we get out of it, we have earnings this week. A couple, and I know we spoke about economic factors last week. So I think CPI comes out this week, PPI comes out this week. And then we got some earnings from retail. It's a big retail week. Every week it feels like it's big, but we got Home Depot reporting. We got Walmart reporting. I'm interested in seeing what Alibaba comes back with. Baidu is reporting. If you're not familiar, it's like the Chinese version of Google. I think they just did a deal with Google as well. So a couple of those companies, Applied Materials. Ian, is there anyone that you're looking at that, all right, we should circle this?
Walmart for sure, Home Depot. I want to see what Alibaba does. Like for me, it's still, and they've done pretty well this month. They went from 78 to like 84, which isn't bad. But I'm looking to see if they have a dramatic uptick into like the $90 range, because that's my gauge for how well the economy is doing. I mean, we've talked about it endlessly, but for that company at one point been at 319 to just have been falling apart because of factors there about their leadership is insane. But I'm looking to see if they get into that $90 range over the next couple of days. So, and Applied Materials I like as well, for sure.
So Starbucks has a higher market cap. I mean, Chipotle has a higher market cap than Starbucks. So what's your top 5 fast food companies?
Let's do it.
I gotta go McDonald's for sure.
Okay.
Darden Restaurants I like, even though they had a dip. Restaurant Brands International.
Good one. That's for those who don't know, they own Burger King.
Yes.
Okay.
Kava I like, is still new, so I still got to wait a little bit of time, but they look promising. And another one that is in another kind of sector, but Fresh Pet. I like Fresh Pet for like the dog food space. So McDonald's, Kava, Restaurant Brands, Darden, and Fresh Pet. Starbucks, another one.
Yeah.
You got to get your shit in order. Like you got to make it a hard change these next 2 years. Otherwise, you can have a spillover effect for like you lose 25 through 28, and that wouldn't be good for the brand. And Kava's on fire right now. McDonald's is doing great. Chipotle is like the king of the hill in that space right now. It's going to get very interesting.
So this is interesting. I figured that we had a few in common, but I knew that you would put that international brands in. So I have a few others. Okay. My 5 would go McDonald's, like you had. I had Kava in there as well. I put Wingstop in there.
I didn't even think of Wingstop.
I put Domino's. Domino's to me still. I mean,
it's still a tech company.
Yeah, tech company, but I put it in there. And and I'm so surprised you didn't have this one. I had Yum Brands. So we're talking about taco. If you've traveled international as much as we have and been around, the one thing that you will see in all these countries, Kentucky Fried Chicken,
big facts, and Pizza Hut, like crazy.
It is everywhere you go. That tells me about the growth and the scalability of the brand in every environment. I mean, obviously here, but you go to some of these, like I've been to obviously Jamaica. That is like a treat. If you can get KFC, like the line at KFC on a Friday,
insane.
is comparable like Chipotle 5-10 years ago, and it's just one of those things. So I had Yum Brands as my other one. Yeah,
take out Fresh Pet and replace with Yum Brands because that's a way better pick. How did I miss that one?
That's why we here.
Good job for teammates.
That's why we here, man. That's just why we here.
Yep.
All right, guys. Well, we'll see you on Blackout. Alicia Keys tomorrow at 1:00.
Yes.
Blackout 10:00 Eastern Standard Time on Wednesday. Yes. BYL University. We got the 2 back-to-back master classes in credit this Thursday and then next Thursday with Shonda. Shout out to Shonda. Shout out to everyone out there that we gotta talk about this before we leave too.
That
I don't like the way that this is headed.
Yeah, it's nasty.
The other part that I will say though,
right? Shaq made a diss record.
That's the joke though. That's
Shaq made a record. I'm like, yo, this is ridiculous.
The Shaq thing is a joke though.
He wasn't joking on the diss.
I'm saying Shaq's not gonna hurt nobody, right?
Of course,
we're not concerned about Shaq. And
why is that even happening?
It's just for fun. That's just for fun. But Shannon Sharp called him a hater. He called him a hater. He said he's jealous. He said
nobody's ever questioned my work ethic. Nobody's ever said that I'm lazy. Shaq has admittedly called himself lazy.
He also called Shaq jealous of Joker and said that
Joker's ill.
When you say somebody's jealous,
he deserved 3 MVPs though.
Yes, and I told y'all that 3 years ago.
He shouldn't.
You wasn't part of that conversation.
Shah should have won MVP.
He should have won.
Shah. He should have won MVP this year.
Why?
They're number 1 in the West with the youngest team.
All right, well, time out.
Lead the league in scoring.
He's not leading the league.
How many points did he score a game?
30 a game.
He scored 30 points a game. Number 1 record in the league.
They both had the same record.
He has the number 1 team in the.
Here's the thing.
Who's number 1 seed?
Oklahoma City, yes.
Okay.
Because they had a better division record. They both finished with the same record. You're talking about a guy who has, number 1, he's a champion, finals MVP. We'll leave that out. But this year, he's top 10 in scoring, assists, and rebounding. Right? Let's not act like he didn't average 27 points, 12 rebounds, and 9 assists. That's what that guy did with the same record.
Shah averaged 30 points a game.
Yeah.
How many assists?
Shay. His name is Shay.
How many assists?
Shay.
Like 6.
His name
7,
is not Shay. Shay is an acronym.
No, that's his name. That's his first name.
What's his first name?
Shay.
It's longer than that.
No, he has a hyphenated last name. Gilchrist Alexander.
Bottom line is he
boy cooking, yo. And Anthony Edwards is amazing, but like
that guy
SGA poetry emotion, yo.
If he's a stock, I'm investing in that.
Oh, absolutely.
Yeah, he's different.
Shout out to Shannon Sharp.
Shout out to everybody. Let's just have, you know what I mean? We can have disagreements.
Shaq, one thing about Shaq, like you can't just Shaq gonna speak his mind. He's not gonna let anything just.
They both are.
Yeah. Yeah, right.
Yeah, but Shaq is a little bit more aggressive.
Yeah, but Shannon has the attention of the public, so he can do it every night. Shaq ain't gonna.
Shaq's on every night too.
He's not. I mean, if there's no game on TNT, he's not on.
It's playoffs. 30 for 30.
Nah, ESPN has the games tonight, so it's like, yeah. I mean, and he has his own show now. He started his own show, but it's not. It doesn't have the same traction as Club Shay Shay.
Yeah,
or the Nightcap. Nightcap is crazy.
Until next time, ladies and gentlemen, keep the peace.
That's it.
Shout out to Hove too. That Book of Clarence, that was a good movie. I saw that yesterday.
Yeah, it's dope. That
was a good movie.
Yeah. Hey,
hidden message.
You know, and they said this was going to happen, so I'm going to do it. I want to give a special happy birthday to my sister, Tahira. I told you this would happen, so I'm gonna give a happy birthday on your brother's behalf. It is her birthday week. Inez, happy birthday to you. I hope all my Taurus people, we love Taurus, so shout out to all the Taurus out there. Enjoy your birthday. What are we doing for Tahira?
Happy birthday in advance. It's later on in the week, but happy birthday in advance for sure.
She want to know what y'all gonna do for it. That's what she asked me.
Not
Something
sure.
major. Something major.
For sure. For shizzle. For shizzle.
Shout out to all the May babies.
All right.
Love is love.